Hello, everyone. Just going to kind of jump into this. I ask if everyone hold their questions for a little bit. You can type them in the chat as we go, and I will address them at the end if I can, and I'll just address questions until 3. And then at that point, if you still have any, my contact information will be in one of the last couple slides, and you can reach out that way. Once I see everyone, or almost everyone, I'll kind of jump into it. I'll wait a couple minutes. I'm going to wait a couple more minutes just to see the last few people trickle in, and we'll jump into it. For those of you that were joining, as I was saying earlier, you will get a copy of this. Once we're done, that'll go out in about 24 hours or so. And then in addition, I'll answer some questions at the end. If I do not get to your question, my contact information will be in the presentation as well. And you can either record it right then or wait till you get the copy of the presentation. All right, so that seems good. So my name is Steven. I'm the Business Development Coordinator for RCN Capital. And we're going to run through what we can do for you guys. So that's me. We're going to run through a few key points. I'm not going to read them all to you. Just going to kind of go over a general overview of what we do, the industry itself, kind of what we do within the industry. I'll talk about a few of our products, how you qualify for them or how borrowers qualify for them, some things that we will and will not do, a rough run through of our process and timeline, and then some examples. And then again, at the end, we'll do some question and answer kind of stuff. So about RCN, we are a national direct private lender. Founded a little over 7 years ago. One of the leaders in the fix and flip space, closing in on $500 million in funding, and in deals that we have funded. Current portfolio is almost $125 million. We have additional capital. It's rarely an issue. So what we do, we provide non-owner occupied residential and commercial property-backed loans. That gives us a couple advantages that we'll go into in a few minutes. We have common sense in-house underwriting, which is huge. It allows us to be very quick in relation to some other lenders. We're not subject to conventional mortgage laws and regulations. That has to deal with us a lot of times lending on investment properties is a substantial part of that. And we can focus more on the asset and the loan to value and less on the borrower's credit and income because of that. So a few things that we can do. Straight acquisition of properties, fix and flip, acquisition rehab, refinancing, and cash out refis. And we'll go through most of those in a little bit. So what does this mean for you guys? You have some funding options for deals that you probably didn't before. This means deals that were previously getting turned away or getting taken off your desk, you can now make money on them. And we'll talk in a little bit about how much and how, because there's a couple different ways to do it. So huge letters at the bottom, it's very important. Brokers are protected and compensated. I get asked every single time I talk to a broker or every single time I talk to a group, how do I ensure that you guys won't go around me and talk to my borrower directly? Or, how do I ensure that the borrower doesn't try to do the same thing? From our point of view and in our system, your names are always linked. So anytime we get a message from anytime your borrower is reaching out for a deal, you are connected to that. We can't separate you on our system even if we wanted to. We have no desire to, in all honesty. You guys make it a lot easier to deal with borrowers. And also, you wouldn't bring us things if we went around you. It's just even better. So, there's a couple different ways that RCN develops business. We have a few primary channels. So that's going to be usually the borrower themselves. You're going to have investors, some referrals, developers, contractors, business owners. And then you have secondary channels where you're going to have brokers such as yourselves, mortgage originators, other lenders, attorneys, and sometimes we'll have accountants as well. One of the biggest things at the start of this is trying to figure out why any one borrower needs a private lender. What is it about this deal that takes it out of the realm of the traditional mortgage world? And the answer to that is not always the same. So that's why we try to specialize in finding specific and creative solutions to each individual deal. So if you were to talk to me or one of our loan officers, you'll hear a lot of times that things are flexible, or that we can adjust as we need to, or even you'll get a range of where you would be. And that's because it'll depend individually on the property and the borrower themselves, as opposed to we have a strict set of guidelines and everyone has to fit that. We have a set of guidelines that exist and we try to make it work for each individual deal. So this is a run through of a few things that we can do that a normal bank can't. And the one thing that we will never do. The first one right at the top, purchase of an owner-occupied property. RCN is not going to lend on that. That is the realm of the traditional mortgage world. It's not a great fit for us. But there's a lot of things we can do. Non-owner-occupied properties, foreclosures, mixed-use properties, bankruptcies. Those are all great on our side. Maybe you might be able to get them at a lender, at a traditional bank. Bad credit, distressed properties, lots of money out already in the market, and then fast closings are going to be pretty tough to find other than places like RCN. So we have the 4 classic programs here, and we'll kind of talk a little bit about some of them. Straight acquisition, so just a normal purchase, we run into that. Fix and flip is a lot of what we do. Do some refinances and cash outs as well. A lot more of those are on buy and hold kind of properties. So we can run into both kinds of scenarios. And as I was talking about earlier, the flexibility is huge. It lets us move faster, and it lets us do deals that, say they have one little problem with them. So if everything about a property is great except their credit score is a little low, we can do that. We just have to make a few small adjustments. If everything's great except, they have low cash, we might be able to make that work with a few adjustments, and that's something you're not going to find everywhere. But despite all the advantages, private loans aren't for everyone. However, for investors, those with poor credit, those who are self-employed, or people who just want to move quickly, they can be drastically important. So there are a few things we do require. One is to have an exit strategy. As much as I would love to help every single person, figure out exactly what they want to do with a property and how, there's just no way. Even just today, there's a few dozen of you on right now, and I wouldn't be able to help every single person figure out the plan for every single project. So that's basic requirement. If you have people come to us that'll say, hey, I really like this property, and then that's pretty much the end from their point of view, you need to have a little bit more than that when you come to us, unfortunately. So just a general idea of what you want to do even is fine. So what that does is it lets us be a little faster, right? So we have everything we need coming. If we have everything we need coming in, that's awesome. That means that I can send things immediately to loan officers if I need to. If I have all the information, sometimes I have to ask like 1 or 2 questions and that's one email that I have to do or one phone call, and then the next day we can already be working on a loan. Sometimes I'll get requests from people that'll be like, I was thinking of buying a house in Georgia. It's like, awesome. I'm excited for you. Where in Georgia? What do you want to spend? What are you looking to do for rehab? All that information is important. And we'll talk about in a little bit about what exactly we need going through all that. So another thing that we cannot stress enough, underwriting in-house lets us be much more flexible and much faster. And it allows us a little bit of leeway on how proceeds are used and what the borrower looks like from a financial point of view. So we can lend in 48 out of 50 states. The only two we do not lend in are Minnesota and South Dakota. And currently it's because we don't think those markets are worth it. If Minnesota and South Dakota had a housing boom, I can guarantee we'd be there too. And that's kind of all it comes down to. So that's an advantage for brokers that are everywhere. If someone brings you, if you're in Michigan and someone brings you a loan in California, we can do that. One in Texas, we can do it. Connecticut, Massachusetts, whatever, Florida, all over the place. Those can all work. So it gives you guys a little bit more flexibility on, instead of having to find like, oh, this is my Florida lender, this is my Mississippi lender, this is my Alaskan lender. We can do all of those. So this is a short kind of side-by-side comparison of a few of our most popular products. On the left side, you have the Rehab Cash Now loan and our ARV loan that are our standard fix and flip programs. On the right side, you have residential fix and lease and our buy to rent program, both of which are designed towards short-term buy and hold kind of financing. So the ARV program we're going to go through in a minute. Some of the others will be here as well. If you have any questions about these that aren't answered by this matrix, feel free to reach out or answer them or ask them at the end, and I'll go through some of them if I can. This is the ARV program. This is our bread and butter. Most of what we do is fix and flips, and this is ideally what we would have everyone in. So on this, we can go up to 85% of the purchase price, up to 100% of renovations. Excuse me. The normal collateral is a 1 to 4 family, non-owner occupied residential properties. You'll hear me stress that a lot. We cannot do owner occupied properties, and 1 to 4 family is really our wheelhouse. Usual term is 12 months, but there is no prepayment penalty if it can go faster than that. So if you have a borrower that can flip a house in a month and already have it sold at the end of 30 days, excellent. If you can have one sold in 3 months, awesome. Anything within that 12 months is completely fine. There's no prepayment. Faster, we get paid back. It's just even better for us. The faster the borrower sells the house, even better for them, right? And they don't have those, those month-to-month costs. Our loan amounts for the ARV program run from $75,000 to $2.5 million. The bottom end of that is a pretty hard cap. The top end of that is a little bit flexible, right? So if it's 2.55, you might be able to make it work. If it's like 8, obviously that's out. Even 3 might be starting to push it. But if you have something that's in that range, feel free to bring it over. I can take a look. And then at the very least, we can figure out together whether or not we can do it. For this one, the LTV on the project, the ARV cannot exceed 75%. For a lot of properties, that's not the problem, right? A lot of properties are going to be dictated by the purchase price and renovation costs together as the value of the loan instead of the ARV percentage. But that does come into play sometimes on some properties in a little bit slower markets or smaller rehabs. Sometimes you'll see the ARV dictate the size of the loan. For this specific program, we have a credit score of 600. That's a minimum. We can make deals work with lower credit, but it will change the terms of the loan. And that's actually, if you take a look on the matrix later, you'll see the program next to this, it's the Rehab Cash Now loan, which does not have a minimum credit score, and a lot of times we'll use a similar structure for lower credit scores. This also requires, in addition to a 600 credit score, this program also requires prior experience. We usually define experienced investors as having 3+ flips in the last 3 years. But 1 to 2 flips will still improve things a little bit. And if you guys have borrowers who are doing serious volume and they're doing, say, 20+ flips a year, bring those over and we might be able to adjust a little bit. Because we understand that those guys can be a little bit more competitive with other lenders and other funding sources, and we can try to be competitive as well. So this is the buy to rent loan. If you're looking at the marketing matrix later, this will be all the way to the right-hand side. And this is one of our short-term buy and hold financing products. So for this one, you can go up to 75% of the as-is value, or up to 75% of the loan to cost. And we'll take the lower of those two. For refinance, we can go up to 70% of the as-is value, and for a cash out, we can go up to 65% of the as-is value. And remember, those are the top of the ranges. Sometimes it can be a little bit lower depending on the actual individual details of the deal. For the collateral, we're a little bit more flexible with this one. We can do 1 to 4 family or multifamily non-owner occupied real estate. We can do 5+ apartments. We can do condos and townhomes, and we can do some mixed use properties. For the mixed use, it still does have to be at least half residential. So that's an important thing to remember as well. The term is usually 2 years. There is a 12-month extension available. However, on that extension, there is a slight payment penalty for that extension, or an extension fee, I guess is a better way to phrase it. And if you guys have that kind of scenario, feel free to send it on and we can take a look. If someone needs, say, a 30-month loan or something like that, we might be able to make it work, and I can take a look. The loan amount for this one, we can go as low as $50,000. We can go as high as $2.5 million. Again, we're going to have some flexibility on the top end. The low end is going to be a pretty hard cap. We have some variable costs per loan that are one thing, but we have a lot of fixed costs that make it unrealistic to do loans less than $50,000. This one, the credit score has to be a little higher just because the usual strategy is to refinance out of this. So we need a 660 minimum. If it's better than that, that's awesome. So if you have something in the 700s, excellent. Higher, even better. But as long as it's 660, we should be able to come to something. For the property value on this one, it has to be appraised as is greater than $75,000. And that just gives you some wiggle room between purchase price and the as-is value, because sometimes people can get it at a discount. For the rent coverage ratio, which is just monthly rent divided by interest, needs to be at 1.25. Very few properties is that an issue. And you'll see, honestly, a lot of them will be above 1.5. Some of them will be above 2, and you're going to see more in that range, especially in the hotter markets where people are going to be looking more to buy and hold and rent it out anyway. So we talked about a few of these earlier, but these are some of our basic loan qualifying pieces that we need. So first one is exit strategy. It's critically important. As I said earlier, it's really hard to do anything with a loan or ask, really any relevant questions unless I know what your plan is coming out of it. We'd like to see borrower experience, background, and credit. That makes it, without any of those, we really can't give you anything in terms of a quote or even whether or not we'd be able to do the loan. Because if we had everything except those three, the difference between an experienced borrower with great credit and the difference between a borrower, the first flip with a credit score of 450, is going to be drastically different in terms of what we can offer. We talk about market saturation levels, and that comes into play as well. So different markets are going to have different levels of risk attached to them. It's, for example, it's much easier for us to make a loan in places like Oregon and places like Southern California than it is to do in like Detroit and Cleveland. That doesn't mean we can't do them in those cities, and that doesn't mean that everything in Southern California and Oregon is going to get approved, but those do come into play. Two other things are cash reserves and existing leases on the house. So if you have existing tenants, a lot of times those will factor that in, existing rent, all of those kind of things. Cash reserves, we like to see that you can cover the down payment. If there's renovations being done, we like to see that you can cover a portion up to the first draw. And then in addition, if there's little things that happen, as they do in a lot of flips, we like to see that you have the liquidity to be able to handle that, and then we can work it out after the fact as well. But just to be able to address closing costs and then any little things that pop up as we go. So, we've talked about this a little bit. The two classic exit strategies are fix and flip and buy and hold. And we have a slightly different breakdown for each one, but those are the usual two, and they can change in details. But these are the vast majority of what we see. So this page is one that might be very helpful if you guys have a section of, a folder or whatever for RCN. This is an important page to know. This is everything that we would like to see when you bring a scenario to us. And it's everything that I ask people for when they bring a scenario. So if someone brings me just the property address, you can guarantee I'm going to respond with the following questions. So we'd like to see property address, purchase price, and if you already own the property or if you have it under contract, when did you buy that property? And if it's under contract, when are you planning to close or when are you hoping to close for? We'd like to see the loan amount requested. Do you want the max terms? Are you looking to cover a lot more of it in cash than normal? Whatever that is. The use of the loan, how you plan to use it, whether it's mostly going towards purchase price or if it's mostly going towards rehab or if it's a refinance, what are you using the refinanced funds for? Is it to work on other properties? Is it to work on this property? All kinds of things. The borrower's exit strategy, as we talked before, usually buy and hold or fix and flip. Cash reserves, that doesn't have to be available right away, but it will have to be seen and proven before we can go ahead and close the loan. If you can come to me on day one with the rest of this information and say they have $60,000 in cash reserves, awesome. Whatever that number is, take a look at it. It doesn't hurt to send it. Doesn't hurt to send it up front if you have it. Then again, level of experience and credit score are huge as well. That allows us to kind of size the loan and figure out where we're going to be in terms of rates and similar strategies. So we're going to run through a couple scenarios. This one is kind of a standard fix and flip. I have a $100,000 purchase price, a $30,000 renovation, a decent credit score. They have experience. They do about 5 flips a year. That's great. So they qualify for our ARV program. So the total loan to cost is $130,000 with the purchase and rehab together. 85% of the purchase price is $85,000. $30,000 in rehab. That will be held back in draws. I'll explain that in a second. The maximum amount that RCN will lend on this is $135,000, which means that has to be less than 75% of the ARV, and we'll talk about in a second what that means for the appraisal. So the down payment we're looking on this is about 15% or $15,000 in this case. Closing costs of about $9,000, and that includes 2 points for the broker, yourselves, and RCN each. Borrower receives that $85,000 for the purchase price at closing, and then the rehab will be held back in draws. In this case, it is 3 draws of $10,000 each. We can We can move around the number of draws, and we can change the amount per draw depending on loan to loan. Most of the time, it's some number of draws and an equal percentage. But if that's really an issue, you can talk that through with the loan officer. They might be able to change what amount of the rehab comes at each time. So the way this works with the draw system is the borrower fronts the first amount for the first draw. So in this case, it's 3 draws of $10,000 each. So you get your first draw when 33% of the work is done. You get your second draw when 66% of the work is done. You get your third draw when all of the work is finished. So as it's talking about, that means you need to front the first 33% of the work. And that's something that, that's where the cash reserves come in, and we like to see those in order to make sure that the person has the liquidity available to finance the first third of that draw, and not run into issues if it goes a little bit late or those kind of things. So as it says here, draws will be issued when that section of the renovation is complete, and that is confirmed by an inspection report. The fees for that inspection report are funded from the draw itself. So there's no additional cost to the borrower or yourselves for that inspection to get new draw funds after a certain percentage of the work has been completed. And as we talked about earlier, the property would be capped at 75% of the ARV, which means in this case, the ARV of this house has to be at least $153,500. So for this one, unfortunately, we don't have a picture. This is another fix and flip. Purchase price of $125,000, renovations $25,000, credit score is 600. It's decent enough to make it work. Limited experience. So this one does not qualify for the ARV program due to the limited experience, and maybe other reasons as well, but that's the key one. So this does qualify for a 12-month loan, and we can go up to 85% of the purchase price. So for this one, it means a slightly higher down payment. You're looking at $24,000 down roughly. Closing costs of $10,000, including 3 points for the broker and 3 for RCN. Borrower has to show $60,000 prior to closing, and they're going to fund their own renovations. And this is probably the key breakdown in between the rehab cash now loan and the ARV loan, is that for the rehab cash now loan, we do not fund renovations, and for the ARV, we do. And that's where you'll have that difference in credit score and experience requirements. So a few things that RCN cannot and will not do. We will not do owner-occupied properties. We will not do raw land. We're not going to do partial owner occupancy, heavily contaminated structures like gas stations and marinas, laundry mats. We're not going to do projects without an exit strategy, and we're not going to do properties that have been equity stripped over a short period of time. So the ones where you look back and it's been wholesaled 3 or 4 times in the previous months, those present a problem. So the important part for you guys is the broker referral program and how this works. On the left side, you have a straight referral fee, which means you guys, a borrower comes to you guys and says, this is what I'm looking for. I'm looking for a fix and flip. I would like funding, for this specific property, whatever their information is at the beginning. And you guys send it over to us and say, this broker's all, this borrower's all yours. Here's the contact information. This is roughly what they're looking for. Good luck with it. And that's usually about half a point to a point paid at closing. On the right side, you'll have heavy involvement. So then you'll see brokers helping to stay in contact with borrowers, helping to collect documents, helping the entire process from the very beginning where you first interact with the borrower to closing and maybe even post-closing, depending on deal to deal. And that would be a point split between RCN and yourselves. And the way it works for how many points you can charge because this is going to be a question that'll pop up otherwise, is you can charge as many points as you want, but not more than RCN. So if you can negotiate 8 points for the two of us to split, excellent. If you can negotiate 4, that's fine. You know, whatever you can negotiate is that level of points. As long as you're not higher than us, it's fine. So this gives people a couple options. Most brokers, in all honesty, pick split points. The difference in involvement is not that big, and the payoff is reasonably, you're looking at least probably twice as much in points for that payoff for probably not twice as much work. Most brokers look at me a little crazy when I say that some people take the referral fee. It is what it is. If you're busy, that's always an option. It doesn't have to be the same option for every single deal. So sometimes you'll have a broker that normally splits points. If you have something else going on and you have a referral fee and you want to say, hey, take this one, I'll work with you again on the next one, that's fine. We can be flexible in that as well. So, and a key thing to know is you guys are included on commitment letters, included on the HUD, included on the letter of interest, and then again, included on a transaction-specific agreement. And in our system, you and the borrower will not be separated. So we tried to include you guys on everything we possibly could to make sure that everyone knew that the broker was involved, to what level. You will see the point breakdown as well in these. So if the broker's earning 3 points and RCN is earning 3 points, you will see that. It won't just say 6 points in the closing statements. And then a check or a wire can be sent directly to you guys at closing. And all of that will be included in the closing statements. So these are going to be a couple examples of things we have already funded. And you'll see a lot of similarities to the examples I was just talking about earlier. And these are, kind of bread and butter for us. This one is right up the street in Manchester, Connecticut. It is almost an $88,000 purchase and rehab loan. The borrower was looking to fix and flip. The anticipated renovations were about $21,000. Potential ROI of $15,000. And we were able to quickly fund the loan, 65% of the ARV. The broker earned about $1,500 in fees from this deal, so roughly about 2 points. So this was probably a reasonably involved broker. For this one in Granbury, Texas, we have a $226,000 fix and flip. Single family home, did some light cosmetic updates, moved a wall to create an open floor plan. RCN was able to do 65% of the ARV on this loan as well. And the borrower plans to have this property listed in a month, and it should be a solid ROI. This one is just a little bit over $2,200 in fees, and this one is 1 point. My guess would be that this was a straight referral. For this house in Hillsboro, Oregon, we have $270,000 purchase and rehab. This is a first-time investor looking for a fix and flip. Borrower is going to be doing about $40,000 in renovations. We were able to do up to 70% of the ARV on this one. The Portland area is really great, as I'm sure all of you guys know. And this broker earned $2,170 in fees from this deal. So this was likely a referral as well. The last one is a $90,000 purchase and fix and flip in Mississippi. This one, the property needed about a little bit over $20,000 in renovations. The projected ROI of 30%, which is great. 65% of the ARV is what we came in at. And this one, this broker earned about 3 points in fees from the deal. Just short of $2,800. So this is my contact information. I'll leave this up for a little bit as we go. In addition, when you get the copy of this presentation, this will be in there as well. If you have any questions or concerns that I don't cover in the next few minutes, please feel free to reach out. Either email or phone is fine. And then I'll get back to you as soon as I can. So on that note, do you guys have any questions? Feel free to type them in the chat, and I'll get to as many as I can. We'll go right up until about 3 o'clock my time, so we have about 25 minutes or so. All right. So a couple of these, just reading through at the beginning, we've already covered. Will you want to verify experience? Evan asks. So we do verify experience, and the way we do that is we take a look at closing statements or HUDs from previous flips. So we like to see, from that standpoint that you were involved or a borrower was involved with it directly. And that's kind of how that breaks down. If you have any additional questions at that, feel free to reach out. So Jeffrey says he's lost deals for experienced flippers to lenders that can go up to 90% of purchase. Are you more competitive on rates or points? If you have someone that's extremely experienced or does really high volume, feel free to send it over and we can see what we can do and see what they're getting offered elsewhere. We have in the past seen people that have been extremely experienced that were willing to adjust rates if possible. But unfortunately, it doesn't happen often. It can happen, and if you have something in mind, send it over and we'll take a look. Steven asks, can we do mobile home parks? We cannot. As of right now, we just don't think it's really worth it. If that changes, then we will. So for first-time investors, how much money do they need? Jose. That's really going to depend on what the leverage is. A lot of times you'll see us cover about, assuming this is a fix and flip, assuming that they have a reasonably good credit score, and that's their only problem with this application is their experience. Be looking at probably about 70% of purchase price. So you're looking about a 30% down payment, roughly. That can increase or decrease depending on the rest of the deal as well. Let's see what else we have. So George asked about seasoning rents on a cash out refi. That is basically the point of two of our buy and hold products. Most people take those. They have the 18-month to 24-month loan, and they do that because a traditional bank lender likes to see some kind of income coming in on those rental properties before they're willing to go for a full-term, 30-year mortgage or something. So most people will have that interim funding from RCN or other direct lenders that will have that, 2-3 years to get that seasoning in place on rents. And then at that point, you can usually take it and refinance out, hopefully. And that's why you'll see those programs require a little bit, or specifically the buy to rent program requires a little bit higher of a credit score. It's because the hope at the end is to refinance out. Joseph asks, do we review tax returns? We do. So we look at, we like to see about 2 years tax returns. And the reason why is we like to make sure that people are paying taxes. We don't look as crazy in depth as some places do. It's not a full doc, but we do like to see the tax returns, just to judge income and those kind of things. Sergey joined late. My name is Steven. S. Ballard at rcncapital.com is my email. So Tracy asks whether or not a seasoned realtor counts as experienced. Usually the answer is no. We've had people in the past that have done, that have been realtors or brokers that haven't done fix and flips themselves. That experience is great and it only makes things easier. However, we also like to see from the project management aspect of things whether or not you have the experience of running through a flip yourself or running through, a renovation for a buy and hold. And then you also see the opposite, where you see sometimes people are general contractors, or we have people that have worked in construction companies and they'll say, I've been building homes for 30 years. Does that count as experience? And unfortunately, the answer is usually no as well, because you have to have that combination of both sides. It's great that they have that experience. And as I said, it doesn't hurt, but a lot of times it isn't counted towards the change in rates on our side. That's not always the case, and sometimes it will affect it. If you have that in mind, feel free to send it in with an application as well. So Darnell asks, once you have a client, if they are yours, if they do multiple loans during even the next few years, the answer is yes. If you had a client that brought us a deal in 2012, and then you brought me a deal tomorrow, you would still be connected to that client. Doesn't matter the time frame in between. There's no period in which a borrower after that could then go and not use a broker or whatever. You are always connected in our system, borrower and broker. And that's kind of a huge point of pride for us. So Monte asks if RCN is a direct lender. Yes, we are. If you have more questions, more to that question, feel free to reach out as well, and I can take a look. So Raul asks, what is the maximum rehab budget you can do in Los Angeles, and does it include additions? The example is adding 1 to 2 bedroom additions. So we can do additions, and we don't have like a hard maximum rehab budget that we're willing to do. Especially in a place like LA, we understand that renovations have to be larger. The deal itself will likely be larger just to increase property values. I have seen some that are even as high as $500,000. That's a pretty extensive rehab, and we, in order to lend out that kind of money, we'd like to see some experience for that. If you have something in mind, send it over and I can take a look, but they can get pretty large. If you have something that's even larger, I can take a look, but I'm not positive. Let's see. So Regina and BJ ask, a couple of my contacts have asked whether or not they can get pre-qualified to purchase a specific property at auction. Is that possible? So what we usually do in this scenario is we will have the borrower, if they can, pay for it at auction. And then sometimes we can work it in where they will get refunded the purchase price at, say, that 85% of ARV, 85% of purchase price and 100% of rehab. And then we'll do the loan that way. Some people can buy it in cash, and then we'll have that refund in there. And that's a common way to do it. But we don't have a system in which we can approve you for, say, $2 million, and then you can just go and buy whatever you want at auctions. Each property would have to be approved in and of itself, and then usually we'd work it through that that refund strategy. So Michael asks whether or not we will consider cross-collateralization. We do, and if you have a scenario in which case you have cross-collateral, feel free to send anytime you send in the information on the property itself. Please also send in the information on that cross-collateral, and we'd like to take a look at both. So Theo asks, how long does it take on average on these loans, given that appraisals can take 2 to 3 weeks? Well, to start with, most of our appraisals don't take 2 to 3 weeks, which is excellent, because 2 to 3 weeks is right about how long it takes us for us to close the first loan with RCN. Sometimes it'll be faster, and then after the first loan, a lot of times it can be as fast as 10 days. That's assuming that we have everything we need when we need it. If we have to wait around for documents from borrowers or brokers, it'll take a little longer. But our goal is to have it done in that 10 days for a second or subsequent properties, and that 2 to 3 weeks for the initial one. So Ed asks, I missed the part about what brokers can charge. I heard the part about we can't charge more than you do, but how do I know what you're going to charge to get my points before I contact you? So we do have a range of what we is usually the points, but a lot of times the broker figures it out with their clients what the points will be, whether that's 4 or 6 or whatever you're working out, and then we split that between RCN and yourselves, assuming that you're fully involved in the project. And then that will be discussed individually with your loan officer. So if you have a scenario in mind, you send over all the information, take a look at it, and have one of our loan officers take a look at it, and they'll go more in depth with you. Or sometimes you can contact them directly and then they will talk you through exactly, what the point breakdown is. And what it basically comes down to is brokers cannot earn more than RCN. They can earn up to equal to what we earn. And that's the usual scenarios, roughly equal. So John asks, how fast can we close in hot markets? Fortunately, it doesn't matter how great the market is. The speed of our close is not really contingent on that. However, we understand that this is a business where speed is of the utmost importance, so we try to keep things as fast as possible. What that really comes down to is getting everything we need from you guys and borrowers when we need it, and then that lets us be as fast as possible. As I talked about earlier, the first one's usually about 2 to 3 weeks. After that, it can be a little faster, and we should be able to get up to 10 days, a little bit more, if things slow down a little bit on the other end. So let's take. What interest rates do we typically offer, Manny asks. Most of our interest rates are in the 10 to 12 range. If you have someone that's very experienced, we might be able to get them down to 9%. That is requiring pretty heavy experience, just to be completely honest with you guys right off the bat. That's looking probably 20 plus flips a year. And you'll see a lot of places that'll advertise really low rates and whatever, and that's going to be a similar strategy. It's going to be for the extremely experienced guys. Someone with 3 to say 5 flips a year is probably going to be looking roughly about 10%. And these can always go a little bit up and a little bit down depending on the rest of the deal. With no experience, they're probably looking closer to 12%. And again, if you have a specific one in mind, feel free to send it over and I can tell you the rough range of where they would be. So John asks whether we can look at an investor prior to pre-qualification and prior to an actual purchased property. So a lot of people will send us stuff and say that haven't actually purchased the property yet. They're just looking. They don't have it under contract. And the way we'll do it is we'll handle it as if they do, right? So we would have, you'd still have to go through, talk about what the rough purchase price would be. If that means you predict it to be $200,000 and it sells for $205,000, we can make little adjustments for that. But even that idea of, it'll sell for roughly $200,000 to $210,000. This is what I'm looking to put into it in renovations. This is what the renovations will go towards. This is what the ARV will be based on comps in the area, or however you can determine it. And then we'll still take a look at experience and credit score. Those kind of things don't depend as much on property to property. And then again, if you have something in mind where the borrower either doesn't have a property picked out or has a few properties. I got one today where a guy had 5 properties and he wanted to buy one of them. So what we'll do is we'll take a look at the 5 and say, this is probably what we'd be able to do on each one of these. And that'll differ, even with the same borrower, that might differ property to property, depending on what it looks like, what area it's in, all those kind of things. So Simi asks whether there's a prepayment penalty on the buy to rent, and does the single family residence have to be tenant occupied at the time of purchase? So there is a prepayment penalty on the buy to rent. I will double check on the percentage. I believe it is 5%. Again, I'll double check on that. If you have that specific scenario, feel free to send it over. I'll take a look. As to whether or not it has to be tenant occupied at the time of purchase, it does not, but that does not hurt the scenario if you have tenants occupied at the time. A lot of times you will have vacant buildings that are being renovated and then leased out. That's a pretty common thing, so it's not an absolute requirement to have tenants in there at the time of purchase. What's this one? So John asks again, an investor just wants to start out, wants to know if they would get approved if they found the right property. Can you give a basic non-committal pre-approval verbally? Yeah, I believe we already talked about that. I was saying earlier that we can approve a rough idea of where you would be, but we're still going to need an individual property, and it'd have to be down to specifics for what we'll actually lend for closing. But if someone was saying, I'm looking for houses that sell for, that have a purchase price of $200,000, I'm looking to put between $50,000 and $100,000 into them in rehab in suburbs outside of, whatever city. That's great. We take a look at whether or not that's realistic, all of those kind of things. And then when they find an individual property, it just makes the process a little bit faster. So I have a question here. What if you haven't done your first flip? So while experience is important and it absolutely never hurts a deal, we can do fix and flips without experience. And a lot of times you'll see that fall into the rehab cash now loan on the left side of that matrix. And the lack of experience realistically means that the down payment will have to be a little bit higher. You'll have a little bit lower leverage on the side of RCN, and the interest rates will be a tiny bit higher. Again, all of that can be slightly variable when you actually go towards closing and you're talking to the loan officer, depending on the rest of the deal as well. So let's take a look and see if there's any others real quick. So this one from Manny says, South Florida is super competitive with many hard money lenders offering 2 points and low closing costs. What is included in your closing costs? In the closing costs, you're going to have usual points, going to have a legal fee of $995. And then beyond that, we like to see there will also be an appraisal at one point that's roughly $500 in that realm. And then in addition to that, we just like to see funds for renovations if they're happening, and those kind of things as well. If you have a specific one in mind, Manny, feel free to send it over and I'll take a look and I can let you know what you would be looking at. So for Samir, are loans recourse or non-recourse? Most of our loans are recourse loans. That is where we'd like to be as often as possible. Sometimes for foreign nationals, we have to do non-recourse loans. And what that will do is it will lower the leverage that RCN is willing to offer. And a lot of times it'll increase the rate. That's really one of the few scenarios in which we offer it. If you have something in mind for a non-recourse loan, send it over and I can take a look. But the vast majority of them are recourse loans. All right. I'm going to take one last look through and see if there's anything that I missed. So Lisa asks, if someone has worked for other fix and flippers or as a partner, would that count as experience? Yes. So as long as you are included on closing statements, HUD statements, whatever it is, yes, we count that as experience. But if it's saying, my uncle did a fix and flip and I helped him out with demolition and that's counted as your experience, unfortunately, that's not really going to apply. We're looking for, kind of applicable fix and flip experience, showing that you were involved in the project, ideally from start to finish. If you were involved in small parts of it, again, just like the idea with realtors, it doesn't hurt, but it's not counted as direct experience unless you really had some stake in it. All right, let's take one last look through. Yeah, so someone asked, can you email the presentation to all the folks that have registered? You will get a copy of the presentation in the next 24 hours. That should be coming soon. Let's take a look. I think that's it. So Jose asks how the foreign national system works. It's a little bit complicated to explain in the next 30 seconds or so. If you have something in mind, Jose, feel free to send it over and we can run through it. All right. And on that note, I'm going to end. Thank you guys all for attending. If you have any more questions, this is my contact information on the screen, and feel free to reach out either by phone or email. Thank you very much. Have a great day.